Good afternoon and welcome to the Blue Line Metals Edge here for Friday, November 18th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching us on YouTube, be sure to like and subscribe. If you need additional information, go to our website, bluelinefutures.com. I really encourage you to take a free 2-week trial of the Morning Express if you're not a client of ours. It's one of the things that we do provide to our clients. It's going to give you all of our 3- and 4-star support and resistance points on all the macro markets, as well as it'll give you additional information, the fundamental information that a lot of people are looking for and all the headlines that are moving the markets on a daily basis. If you want more of a technical aspect or more of a quant approach using the macro markets, be sure to also look at the Tactical Insights, which covers a lot of your proprietary algorithms, gives you also those key supports and resistance, but it bases it more upon some of the standard deviations of the markets and some of the way we're seeing these markets move. Now, getting into it today here, we do have a bit of backing off going on in the markets. We've got gold here down about $8. It was a little bit later the day of a sell-off. Same thing with the silver market, platinum. Copper was always under pressure most of the day. That was gripped by headlines out of China that their COVID case counts continue to rise. So what's reopening, what's not reopening, how many cases they have, is the number even accurate? I'm not very sure. All I know is that copper market is a direct reflection of what's going on in China, and it's continuing to sell off. You can see in this market right here, for many of you that were involved with the copper market on the micro copper side, we lifted a lot of those positions today. It's not that I don't think copper is going to continue to sell off. It's just we're running out of time on the December contract. That's all. And being in micros, the liquidity is going to be, it's going to dry up faster. The volume's going to dry up faster. So we'll want to keep an eye on that March contract. And if we get any kind of bump back up on copper to a lower high, we'll look to reestablish new shorts there. Copper works as a great hedge against other markets like the silver market. It's interesting to see how this one's breaking down so much. It's already getting into this candle right here. That was that CPI data. Now we look over here. We haven't broken in there yet. So basically, silver should be down in this region right here if the correlation between silver and copper are that great. So we'll look at that correlation matrix, see if it's like 90, 95%. That could be a setup here. And especially if you add and you look at a study and you look at the MACD. Let me see if we could pull that up real quick. That MACD, if you add that and you look, this is crossing over here. If you got the one with the histogram, it's going to give a different picture. You can see that histogram's getting ready to roll over to the downside. So that's why I told a lot of people, hold off on silver at the moment. Don't chase it up. You get that breakdown and we get that crossover on the MACD, you continue to see liquidation in the copper market, you're going to get your opportunity to buy silver down $1.50 sometime probably next week. I would anticipate something around Tuesday. Looking at the other markets here, the gold market, that's another one starting to roll over. Gold's looking a little bit better than than silver. And if you look at my other platform over here, I'm running that gold-silver ratio. That's a chart that I kind of monitor. It's a smaller one I keep in the background. That's been ticking up. It bounced off at 80. Now we're at 83.6. We could easily get back to that 85 to 90 range on that gold-silver ratio. That's the spot where you come in. You start buying silver again. You start looking at the call spreads as well. Other markets that kind of stood out. There was a big rollover out of D's crude oil and into January crude oil. We saw crude oil prices crash on that news. Nothing came out fundamentally. There were no changes. There's no like Russian oil cap. They didn't find a bunch of supply. The Democrats aren't allowing people to drill and pump more. So not some big capex spending going into the oil industry. So this was strictly just a rollover. And what you could see is it went contango at one point, which means that front month was less than the back months, and that's not been the case for crude oil, not for any time recently. And you can already see that if you go to January, you compare it to like February or March, there's a differential back built in there. It went from negative 38 cents back up to positive 30. So that's that contango writing itself. There was a small arb moment for people that were closely watching that. Now looking at the tactical insights, again, no big changes on here. We didn't have enough volatility in the markets. The only thing that triggered a change was the crude oil market. Many of you are in March. Depending on the account size, we added more Marches on this breakdown below that 80 level because of the fact that nothing fundamentally really changed out there. As far as the grains are concerned, the grains still look really good to the upside. Corn is one of your best bets on the upside. Sugar's been relentless. Sugar here closed the day back north over 20, so bouncing off the low end of the range, pushing right back on up. So the low on sugar was 1959 on the day, where 1952 was our tactical range low. So that came in really spot on. Getting into some other markets here, you can see obviously how things are positioned. Now, if you catch one of these moves, if you're going to buy the breakout, buy this trigger at 1713, put the sell stop in, and you see that those prices get up and we get close to near some of these contract highs, you want to trail that stop more aggressive. You want to start using this risk management stop against your long position. That's how you actively trail the stop. And I say right here, suggested trailing stop for active swing traders. So I outlined that on all the different markets, the gold, the silver. Here's that ratio on gold, silver pushing back up. I see there is this downtrend right here. So we'll keep an eye on that. But we are running also into multiple moving average. That's the 50, that's the 200-day on the gold, silver ratio. If it busts through that, though, we could be going up to 90. That's what I'm saying, being a little bit patient on that market at the moment. Other things that stand out, not too much over here. Here's that 2-year, 10-year yield where it's breaking back down. Actually forged a new low. Now, fundamentally, this is why I said on Tuesday I think that there could be a big sell-off. Remember, as we come into this holiday week, light volume. Remember what happened last Thanksgiving? China had like the Omicron, whatever that other COVID variant was. Crude oil was down like $10. The market freaking crashed. Okay, because there was no volume on a Friday, and that kind of news comes out. Bam, market sells off. So what I'm thinking is that you've got going into next week, you got the most hawkish Fed guy coming out right here, James Bullard from the St. Louis Fed. He's going to be talking again. So he'll be talking 1:45 on Tuesday, November 22nd. There's going to be nobody in the office. That could be something that takes that market down. So be careful, you know. And then a couple other things I was looking at that stood out. I always watching these CPIs. I wish you could filter just all the CPIs when they come out. Bank of Japan core CPI. Look at what the previous was, 2%. What are they expecting? 2.2. Another uptick. Let's look at what that chart. Ooh, that doesn't look good at all. That doesn't look like inflation's slowing. That's why I'm saying the Fed can't stop where they're at right now. What if they just do a series of 50 basis point rate hikes? What's that going to do to the dollar? What's that going to do to treasury yields? What's it going to do to precious metals, the thing you like? So I'm not a big basher on precious metals. I'm just saying that as it goes up, you scale out. As it comes down, you scale in. Don't be emotionally charged. Try and buy those tops. You're going to end up getting burnt on that type of move. So other than that, you have any questions, give me a call. I wrote up an article on Kitco. Basically, I'm saying is buy the next crash on silver. And remember, the way this market moves, there's no silver short squeeze going on. Maybe if you're trying to buy some rare 1920 Mercury head coin, or you're chasing down one of these things, yeah, that thing's going to cost you $40. But silver on the futures contract, $20.97 right now. Buy it all day you want. So if you miss the one bus, you're going to have to wait for the next bus to take off again. So if you miss this rally up that we got right here, don't sweat it. There's always another one coming up. If you have any questions, again, futures options trading, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trade.